This one-stop hub is the brainchild of food distribution company X Inc. Kitchen spaces, storage, and even consulting services under one roof to help the food industry collaborate and reduce overheads. The siblings behind the $65 million facility are the third generation to run this family business. X Inc. saw a decline in business due to the pandemic, but the setback only boosted its leaders' sustainability drive.
Businesses definitely dropped. And then, of course, adding on to the freight costs and the cost of distribution, everything has gone up. But I guess in a good way, we took this opportunity to try and work with partners. We are actually working with a lot of local farms now.
X Inc. has a history of overcoming adversity. In 1939, on the eve of World War II, the siblings' grandfather, Ng Lim Song, started a food distribution business. Out of a shop house in Rochor Road, he supplied food products to roadside hawkers. Their late father and uncles expanded the business into various areas, including movie making. But it all collapsed in 1997 during the Asian financial crisis.
Very thankfully, my dad actually managed to ring-fence my grandfather's food distribution business, which back then was like a small part of the entire empire. And we managed to continue the business to what it is today.
Nickel joined the family business in 2002, and the siblings took over a few years later. They began transforming the then 7-decade-old business, starting with a name change. In 2012, they set up a food bank, the first in Singapore. The company uses biofuels for its delivery trucks and is now supporting local farmers and alternative protein startups. It's also ventured into a social enterprise that offers second-hand materials as retrofitting for retail stores and restaurants. This focus on sustainability runs through the group's main businesses of food service, retail, logistics, and property.
And I think the payback is just about to happen. The tangible returns really is that even the banks, for example, in potential investors, even the larger brands that have decided to appoint us as a distributor, they have simply appointed us on the basis that we are marching to a different beat and we are resonating very much to their own corporate values as well.
As values evolve, sustainability has become a measure of business success.
Companies with strong ESG practices are actually better managed and better able to adapt in a more uncertain post-pandemic world. The global investment community is very interested in ESG issues and have reached a tipping point. Investors are now demanding corporate leaders to improve sustainability practices that benefits both the firm's bottom line as well as a greater impact for the wider community.
Globally, sustainability-themed investment products in capital markets hit $3.2 trillion in 2020, up 80% from the year before. And this year, global inflows into ESG funds reached almost $140 billion as at end June.
We see clients generally interested in ESG from a multi-asset approach. Some other investors prefer a thematic approach that supports companies which derive a portion of their profits from opportunities associated with climate change, for example. And also, of course, there is a big group of clients, especially the next gen, interested in impact investing.
Failure to adopt ethical policies could mean regulatory risks and loss of customers for firms.
The greatest challenge is actually alignment with the business in itself. They have to really internalize it from end to end in their business, not only within the organization, but across the supply chain and also across the distribution to their customers.
In a research article, NUS Business School found that sustainability reporting among Singapore-listed firms helped increase their market and brand values.
The measurement is really the holy grail of sustainability adoption now. But I think for companies themselves, it is also more important to build the capacity in the organization. In other words, to amass the right resources and also to develop the capabilities.
But HSBC says family businesses are in a good position to lead sustainable transformation.
Their primary goal is to protect the legacy for the generations to come and of course, by embracing ESG issues, they can increase the impact across sectors and countries.
For X Inc., its leaders have joined business networks to tap into the knowledge of large corporates.
A lot of the corporate governance, so to say, was only allocated maybe for the larger corporates, and they've kind of like figured it out already. But a lot of the micro SMEs, a lot of the smaller, medium, and small enterprises like ourselves are still figuring out the way forward.
For now, X Inc.'s biggest hurdle is changing the mindset of business owners about the price of food.
When you demand for cheap, it's quite unlikely that it comes from 100% ethical or 100% traceable sources as well.
As technology evolves, family businesses can only hope that the cost of sustainability adoption will eventually fall.
I actually can't envision us not pursuing any of these things. So I don't know how different it would be. We didn't purposely go out and do whatever we're doing for all these ESG things just for the purpose of ESG, but we really did it because we really feel it's the right thing to do.